Welcome to the Iconoclast Roundtable, and I'm your host, Sarah Haboubi. So the Iconoclast Series that's been going since March 2021 has been a platform for off-narrative voices like yours. We had hoped that by having guests on like you, we could give data, information and perspectives that the mainstream media is not sharing, so that people can actually make up their own minds as to which direction they want to go, rather than being dictated to by the government and by media. And at present, you might have heard the term mass formation that is trending. We don't know if it's trending organically or not, we're not sure. But it doesn't matter, because actually that term and that concept helps to explain why so many people have actually completely, unquestionably followed the narrative since March 2020. And whilst the majority of people have actually been distracted by the narrative and by the pandemic, you have all been looking at things in a very different way, in a different direction. So we would actually like to take this conversation to a whole other level. It's time really for us to start looking at what's been going on behind the scenes, what's actually coming down the line at us that we need to start preparing for in some way, shape or form, whether it's individually, or collectively. So we have today with us Jim Miller. Jim is a retired senior army officer who studied mathematics, Irish language and legal science at university. He's also a farmer and helped to set up the Hemp Cooperative Ireland. He was on the board of the Business Retail Union of Ireland. He also helped to set up the platform, which people can access and have a look at the platform.ie. And most relevant to today's discussion, he set up the Public Banking Forum. And for good measure, he also ran in the 2016 elections and European elections in 2019. We have Mark O'Byrne. Mark, you spent the last 2 decades of your life helping people to understand our unstable financial system and how a few actions can help people, families and communities to take control of their lives and become resilient. He's a mentor, a consultant, a speaker, and is one of the leading experts on gold and silver in the world. He also founded Goldcore in 2003 and was a driving force in making Goldcore one of the leading gold brokers in the world, with over 20,000 clients in 140 countries, with over $1 billion in sales. And he also won MoneyMate Financial Analyst of the Year in 2006 when he correctly warned about the property bubbles in Ireland, UK and the US. We'd also like to welcome back Eddie Hobbs. Eddie's a very well-known Irish financial advisor, former television presenter and author. He's known for his presenting on RTE shows such as Give or Take, Rip Off Republic, Show Me the Money, and 30 Things to Do with Your SSIA. And when I went onto Wikipedia, there's a huge page on you. So if people want to find out more, they can go there and find out more about you. But I think everyone on Ireland, if they don't know you, has been living under a rock. Melissa Ciummei, welcome back. Melissa is a successful and outspoken investor who since 2008 has dug deep into the cause of the economic crash, what money actually is and how it's controlled. And Melissa's Iconoclast one-to-one interview went viral with over 2 million views all over the world. And we are in the Hall of Fame in terms of being censored on YouTube. And if anyone hasn't seen that, it is actually on the Ryland Media BitChute channel. Obviously, it really hit a chord with many, many people. So we're going to kick off with you, Eddie, if that's okay. So you are actually on the very first Iconoclast Roundtable. And has anything changed for you since that time to now?
Well, it has quite a bit, like everybody else. I mean, it seems to be extraordinary that we're nearly 2 years now into what's happened and we're talking about where it might go, I know that. But I do know this time 2 years ago, I mean, it's my job, I advise on about $250 million of financial assets across all asset classes, including gold. In fact, I've been putting clients into gold to a degree since 2004. And then the global financial crash came, and I've been trying to make sense of that ever since. But when the pandemic hit in the early stages, I was watching what was going on. Some of the news feeds coming out of China seemed to be very, very curious. And then, of course, the thing escalated. And I have to freely admit, like everybody else, I plugged into the Irish mainstream media led by RTE, IV drip every evening at 7 p.m. watching the fog coming in and the vampires appearing after the interviews with the so-called interviews with Neffet, while we were all given this, very scary information. And just like I'd say many other Irish people, my sleep was disrupted. I was having crazy dreams. I was at a high level of anxiety, and it wasn't until I got out of that I could see that for what it was. So I started to develop my background is to really look at joining the dots, which is what Rip Off Republic did back in the day, and trying to put the dots together in all of this. So when I attended the first Iconoclast Roundtable, I was only beginning my journey into trying to join the dots and understand it. And I had come in very much through the financial economic door into it, and very, very concerned, especially about the complete withdrawal from their job of the Fourth Estate, which is the journalism in Ireland just literally stopped dead. And unlike other markets, it stopped dead, and it really did stop. I mean, I know the characters, I know the newspapers, I know the radio, I know the producers, I know RTE, and I could just see it actually happening. So it became quite clear to me we were all on the IV drip at that stage, where we were looking at cases. I didn't understand what cases really meant at that stage. I now understand it. They're not cases, they're magnified levels of PCR, which produces a certain type of data outcome. I was looking at deaths, assuming they were deaths from COVID, but they weren't deaths from COVID. I know that they were deaths with COVID. And then the dashboard that we were all fed on the IV drip wasn't the correct dashboard, because it didn't report all of the data on the number of people that didn't turn up for cancer screening and didn't get treatment during lockdown. So I started to look at lockdown. There's another word that definition was changed. And lockdown, I discovered, had no scientific validity behind it at all. It was manufactured out of China. And there was no studies at all done internationally on lockdown. The early studies were saying, don't lock down because the cost you will pay will be many times the impact of the virus. And that was ignored, and I found that very, very curious. So we've been assuming that lockdown has some kind of fundamental science behind it. It doesn't. And what we don't have when we look at the cases, the deaths, the hospital admissions and the ICU are all of the people that have been egregiously affected by implementing what was effectively a Chinese solution for them. And when that came out in Q1 2020, a lot of what we were fed was fake. You know, it was fake people falling on the street. And then we had a magnification of the terror through Imperial College in London, which came out with a study which suggested that millions of people were going to die from this thing. But when we look at the Irish data then for all-cause mortality in 2020, we'll see that it's no different from a heavy flu year in 2018. But we're now seeing excess deaths in 2021 during the vaccine year. So where are those excess deaths coming from? So there's an awful lot of data, hard stuff yet to come out. And those excess deaths, common sense, and I have no medical background at all, seems to indicate that that's the overflow of lockdown. This is the price you pay for lockdown. So lockdown is causing significant damage from young people, developmental delay because they haven't been going to school, all the ways through all age groups, mental health, etc., etc., etc. So we're now in a situation, as I see it, where Omicron seems to be what I've described as a Teletubby variant. It's hugely infectious, and it's not causing any great problems, except those perhaps with underlying comorbidities and all of that type of stuff. So we seem to be at the beginning of the end of the pandemic. And now suddenly, not suddenly, but we're now beginning to talk about, well, what have we gone through? What is this thing we've been in? Like a great murmuration of starlings. We've been just flying around, and what has kept us up there? And more people, I think, are becoming to the conclusion this doesn't add up. It just doesn't make sense. And it doesn't make sense. So I've been then looking at, well, was this then generated by a confluence of interests? The Chinese Communist Party seeking to weaken Western liberal democracies because it fears the most Western liberal values, which is why it crushed the student rebellion in 1998 in Tiananmen Square. Is it the pharmaceutical industry looking to build empires based on vast wealth? Are there greater, actors behind that? And all of those type of theories and hypotheses that are out there from nutcases all the way through to very serious analysts, all begin to ask these questions. Nothing is certain, that's quite clear. It's still a lot of hypotheses that are out there. But an awful lot of it has more validity than what we've gone through. And that's very, very curious for me. And I know we'll be talking about the global financial system, and I don't want to hog the time or anything like that. But I would say that, look, when we do get into this, one thing to understand about money is that money is a unit of account. That's all it is. It could be shells, it could be bags of salt, it could be gold coins. It's fiat currency as we have it at the moment. And our entire relationship with money, which drives the capitalism globally for the last couple of 100 years, is all based on trust. That's what it is. And its trust is based on growth, that the world economy will continue to grow, and that the growth itself will support the concept of money that we currently have at the moment. That's what it's all based on. So that doesn't mean that the way we handle money and the money that's there at the moment is going to be how we're going to do it in the years to come. So what I think is happening, and I know we'll get into this discussion anyway, is that the biggest money outcome from the pandemic, and I'm not saying the pandemic has caused it, I think it was a tipping point, right? And it's persistent high inflation. And people think, well, it's just high inflation. High inflation is a very serious problem. And if it persists, it's a particularly serious problem. And if it goes to the extreme end of the bell curve of possibilities, you could have a collapse of the global financial system. That is a possibility that's out there. It's not a certainty, it's a possibility. In the meantime, what we're tackling straight away is high inflation. So as we speak today, main headline, one of the newspapers, 20% increase in labour costs for brickies. What we're beginning to see in the United States is wage growth demands up 6%. At the end of the year, US inflation came in at 6.8%. The Germans are looking at 5%. And by the time we get our next data, which by the way is at 11 o'clock on January the 19th on the CSO website, the next inflation number will come in. If you want to put it into your diary, you'll see it. I reckon we're going to be sitting somewhere between German and US inflation. Now, the central banks are telling us, don't worry about it. We've got a handle on all this. It will be half this level by the end of 2022, and then things will go back to normal. I don't buy that myself. I don't believe that's going to happen. But that doesn't mean I'm in that part of the discussion where I think the whole thing is going to collapse. I don't believe that's going to be the outcome, not immediately. I think it's a possibility.
So, Melissa, inflation. What does that actually mean in terms of for the ordinary person?
Money creation is inflation. The consequence of that is higher prices. It was baked in the cake when they started printing the money. I wish more people knew this about inflation, because then you'd be a little bit more upset about getting handed the money to stay at home. So for me, it has never been a medical lockdown. It was an economic lockdown. The credit markets had to be seized because with what happened in the repo market in September 2019, there was the potential for everything, the whole global system, to freeze. They knew this. This was coming out with the BIS in June of 2019 that the market was overheating. Then they created another paper in August, another white paper regarding similar. And then you had the Jackson Hole Symposium where they were discussing central banks going direct. So BlackRock anticipated this all before the Event 201, all before any of this. So the market was already in trouble. This money printing did start in 2019. This is when they decided that they were going to collapse this, let this current fiat currency go.
Can I just ask you there about going direct? Mm-hmm. So one of the things that happened with the 2008 crash was this term too big to fail. Mm-hmm. And so we were talking the other day and you were saying, yeah, but the commercial banks, if the central banks go direct, mm-hmm. they will allow the commercial banks to fail. So can you explain a bit about that?
Well, it's the commercial banks that are, when you take out a loan, that you are creating money into the system. That's how it currently works. So this idea that you're going to pay it off, that's impossible. If we started to pay off the debt, the whole system would collapse. It's dependent on us being consumers. This system is completely dependent on us being bigger and bigger consumers, and that's why there was more and more creative ways of bringing about more debt. So for the central banks, BlackRock made the proposal at Jackson Hole for the central banks to basically cut out the commercial banks and go direct. This is the initial implementation of a central bank digital currency. This is what is going to evolve into central bank digital currency. They didn't decide this then, that there was an IMF paper in 2015 regarding central bank digital currency being the new fiat. It's still a fiat currency. It's still backed by absolutely nothing. And this is why we're in this mess. Because there's nothing to tether them. Once, in 1971, when it came off the gold standard, pretty much every country just started running a deficit. Even in the good times, they just ran a deficit. Why would you not, when you can print money out of nothing and implement whatever policies you choose to implement?
So Mark, so your background is predominantly gold and silver. What do you feel about what role that's going to be playing as we move forward?
I think it's going to come into its own in terms of doing what it's done for people throughout history, which is it's a store of value. It basically protects people in uncertain times. It has been money throughout history, and it's been the safest form of money throughout history. So, and I agree with both Eddie and Melissa in terms of their analysis and what they've said. So there's real risk of inflation, stagflation, and indeed hyperinflation is the worst case scenario. So I've been warned about this for 20 years, and we had that last financial crisis where the whole thing did nearly collapse in 2008 to 2012. But they managed to kick the can down the road by electronically creating trillions and trillions and trillions of dollars, pounds, and euros, you know. So the expression we used was kick the can down the road, and that's what they did very successfully. But we seem to have forgotten about that, you know. As Melissa said, before the so-called pandemic and the lockdowns, the whole global financial system was creaking to a halt again, and they need an excuse to suddenly inject the trillions and trillions again, you know. And they literally just go on a keyboard now, and they can create $1 trillion. It's gone parabolic. We've seen this since 1971, as Melissa says. That's when the gold standard ended, 1971. And it gradually went up. You know, a picture paints 1,000 words. The debt was gradually going up. And then September 11th, actually, when Bush reacted to September 11th, it started going a little bit parabolic. And the US debt alone went up $1 trillion a year from 2000 to 2008. Then Obama came into power, and we had the global financial crisis, another $1 trillion a year, just in US national debt alone. So the dollar is now the reserve currency of the world, and it's not backed by anything. People think it's backed by anything, it's not. So we literally we have a little bit of paper, but they're trying to move us away from the paper. And that's partly what this whole pandemic is about, or scamdemic, or condemic, condemning us all to a form of slavery, you know, economic slavery is where this is potentially going. So, yeah, we need to be aware of that and to realise it's not about public health. There's an unholy alliance of a whole very powerful interest, whether it be the central banks or big tech or big pharma. And they're not all sort of working together. It's a sort of a confluence of interests, and they're parasitical interests, and they are just using this for their own best interests, you know. But ultimately, they're going to the central bank digital currencies, and we need to be very aware of that. We need to prepare for that, you know, and start thinking about the solutions.
So, Jim, in terms of the central bank, what's been going on in Ireland that has been controlled by the central bank here?
There are many answers to that, and I would certainly refer anyone to the article I published on the platform in September or thereabouts of 2020, because I could talk for an hour about that. I mean, fundamentally, the central bank is charged with responsibility for managing stability within the economy, and it cultivates the very opposite. Now, there are still 50,000 people today facing court decisions, courtesy of the financial crash, which was announced in Dublin in 1999 in the trading room for those who had ears to hear. And the central bank, along with the major audit firms, along with the major banks, manufactured the crash in Ireland for 9 years. And the tipping point had been identified in 1999 on the stock exchange. The solutions, as far as I'm concerned, have to be radical and comprehensive, because the entire system is designed to extract the energy of people. And at a fundamental level, money is people. People are the money. There is no other money. And the Birth Cert Trust Fund is one mechanism whereby the system has extracted that value. And my estimate at that today, there are other estimates, bigger and smaller, but my estimate today is based on something I learned when I was going to school. It's about 10 million per head. That's roughly the economic value that's placed on every man, woman and child. And you can multiply that by 10 billion if you like. And that gives you the real asset base of the world that is used by the system at different levels. The local solutions, as far as I'm concerned, are public banking. But that is the same solution everywhere else. It's the solution that the Germans copped on to 250 years ago and have paid us an enormous price for ever since. I don't want to go into the history of it, but that is the fact of the matter. And I mean, the Germans have been abused at a phenomenal level. And I don't stick a tooth in that. I remember when we brought the Germans here back in 2014, I was puzzled to know how we could expect the Irish people to listen to the Germans telling us about banking because of the history. But my version of history has turned 180 degrees around. Until people realize the massive lies that are told in the form of history. And I'll start with a couple of fundamentals. I mean, the entire legal system is a con job. Outrageous con job. It is not law. That's the first thing. We are still ruled by Roman law. And one of the fundamental principles of Roman law is, if you can be fooled, let you be fooled. Full stop. So there is no requirement for integrity or honesty within that system. Let him who can be fooled, be fooled. That's what resides in your courts today that you think are real. The solution is comprehensive. It's not just we'll fix the health issue or we'll fix even the public bank issue. We need a radical review of which way the boat is going, because the boat needs to be turned around.
So Eddie, you were saying, you don't feel that things are a certainty. Where do you feel that we're actually heading at the moment?
Well, I think that the US dollar will remain the world reserve currency for the time being. It's strengthening as we speak. The US economy has global preeminence over the rest of the world in terms of its power. The trust in the money system will remain so long as we continue to get economic growth. The debt levels are scarily high. We could have problems there in certain parts of the world. But for the time being, I don't see any possibility of a global collapse of the financial system. I don't share that point of view. I think it's a possibility if we continue to add more debt to debt and we abuse the monetary system and we've printed far too much money, which, by the way, is 25% of global GDP since the global pandemic. And that's why we're getting the inflation. I think the central banks are spinning a story to try and calm everybody down. I know that there's 40 global central banks involved in formulating plans for digital currency. And you've private cryptocurrency on the side, which is going to come under pressure from legislation and regulation to try and thwart it. And then, of course, what really got my gander up was the implementation of digital passports. And because the passport system, the health passport system, which I came out very strongly about, I was very, very concerned about President Higgins passing that without referring it through the Council of State and to the Supreme Court. That was thrown out by the Spanish Supreme Court and the Slovenian Supreme Court because it was a fundamental breach of human rights. And it just breezed through here, through the Dáil, through the conventional media without much comment. And now what have we got? And because I was criticised at the time for saying that this was to try and, so that we, to create terror around those that hadn't vaccines. And what have we got several months later? Right at the centre of Europe, we have a country, Austria, which is now fining its citizens for not vaccinating. They're making vaccines mandatory, had toyed with the idea of putting them into prison, segregated prisons. There was a picture of the world just recently floating around on social media, a picture of Australia, and under it was the world's largest prison. You know, so Australia has lost the grip on it. Relatively speaking, Ireland has taken a much softer position, I think perhaps for constitutional reasons, and also because it wouldn't fly here. And we'll see that. There was a very, very strong reaction to the idea of mandatory vaccine passports in Ireland, and the political antenna is now up. They're backing off. And the conventional media antenna is up. They know that they've overcooked it. They've been out on the extreme end of the narrative around the pandemic, and the narrative is breaking down, you know, and left, right, and centre. So I see that positively. So I mean, I just don't share that outlook. I mean, that's my job. I have to take all sorts of analysis into account, from conventional areas as well as more unconventional thinking, and I just don't see that. I think that we're going to continue to see preeminence of the US economy and the dollar strength for many years to come.
And in terms of the money printing, though,
yes,
how can that be slowed down or stopped?
Well, we've had bouts of high inflation before. We've had several throughout the last century. We had a big bout of inflation at the end of the Second World War, which lasted, you know, I think it reached a peak around 20% in 1947. We had another bout of inflation from 71 to 82, 83. It was killed stone dead by Volcker, the head of the Fed, in 1983, when he increased interest rates to 1.5 times the US inflation rate and just killed it dead. And we haven't had it since. Now, the problem we have had since then is that because we've had no real inflation, I mean, we've had modest inflation. We've had, you know, low levels, target levels of 2% by central banks and so on. Now we're at 3 or 4 times that. And the central bank's problem is that to kill inflation, they'd have to increase interest rates to roughly 1.5 times the inflation rate. So like that would mean that the ECB tomorrow morning would have to increase interest rates to 7.5%. Imagine what, I mean, it makes it like a flamethrower to the European economy. It just wouldn't work. And the world economy would be suffering from it as well. So they can't do that. So they're applying hope rather than science. And the hope is that inflation will moderate. It will come down to probably on somewhere between 2 or 3%. They'll keep interest rates extremely low for many years to come and create a negative interest rate environment, which basically means they're robbing people's money, the value of people's money in banks and in government bonds. And they hope to maintain that situation for many years to come in order to pay back all of the excess debt and stabilise the system. But they know that that's plan A, and they need plan B. And plan B is, as you've been saying, is central bank digital currency. It's in the wings, it's being discussed. And the real issue for me as a liberal democratic type person is that all this is happening outside of democratic chambers. We've been bounced into this. I mean, the Dáil had no impact whatsoever on the pandemic. We're bounced into it from bigger organisations that are out there that are far bigger and stronger than sovereign governments. So for me, there's a huge war now, and it's not a war of kinetic warfare. There's a war now started between liberal Democrats, people who believe in individual freedom, and what I call corporate authoritarianism, which is what we've seen behind this pandemic. And these are, you might say, well, what's driving that on that side? And the answer is very simple. They're building empires. The East India Company was an empire back in the day. We've had these empires before. Standard Oil was another empire. So we're seeing the big empires behind us being built. And the empire is being built on harvesting human data. That's the biggest game in the 21st century, and that's what they're after. And that means they would prefer to have the global population basically treated like battery hens, doing what it's supposed to do to generate the wealth for the empire as they see it. Now, they'll see it in completely different terms. It's natural capitalism. It's what we're supposed to do. And I'd say it is until you're stopped. And at the moment, this is not being discussed. It's not being discussed in the conventional media, and it's not being discussed in the democratic chambers of governments, especially in our country. And that's a real problem. So there is an awakening going on, but it needs to greatly accelerate. And people need to see that there's more going on behind the scenes here than this pandemic, upon which there will be backlooks. There's going to be a lot of hard backlooks at all of this, and a lot of reputations will be shredded when the truth emerges about what really happened over the last couple of years. And the questions we'll all be left with is, was that a confluence of vested interests that just happened to be on the pitch at the same time, or was there an agency behind this, an intelligence behind this? I think it's more of the confluence.
Melissa, because in our interview, the one-to-one, you used the expression which was that data is the new gold and energy is the new currency. And back again to the vaccine passport, you know, this implementation, which we now know, the evidence is out there that the vaccinated are just as likely to catch the variations going around now as the unvaccinated. So the passport makes no sense from a health point of view whatsoever. In terms of what businesses can do, though, regarding the passport, what's your advice?
Well, with the passports, there's something else keeps on coming along to keep the economy depressed, and the passports is just another form of that. So for businesses, should they choose to participate in this passport system, they're initially reducing a portion of their customer base. You can get the test, you can get you can have the vaccine passport if you've had the vaccine, but the next step is, well, if you haven't had the booster, then, like I say, it's a matter of time before your light turns from green to red. They're going to continue to suppress the economy in order to bring in their new system. People need to question, what is money? Money is labour, goods and services in the economy. It's a store of your sweat equity for future use. That's why when it's tethered to gold, gold tends to come out of the ground around the same increase in population, so it works. That's why gold has historically worked. They are abandoning this completely, getting our sweat equity for money that they have created out of nothing, because when you say they're in debt, to who? Who are they in debt to? They're in debt to future generations. That's who we're actually in debt to. So they're moving away from the consumer economy into a credit system economy. This is where the central bank digital currency, this is how they have solved this mathematical problem that they're going to put everybody in credits. Inflation within that, inflation is, it's an attack on mostly poor people and savers. It's horrible if you're a saver. Your purchasing power is being inflated away. It's good if you have tangible assets, because those tend to increase with in the inflation rate. It's great if you have debt, because your debt is being inflated away and governments have debt. The inflation genie right now is out of the bottle, but we're moving into what I would call a superinflation, not hyperinflation. Hyperinflation is the 50% month on month. So we're kind of in that superinflation period right now. They might be able to, that superinflation might be transitory, but inflation itself is absolutely, it's here to stay. As Eddie said, their solution to that could be to increase interest rates. They can't do that because they can't service the debt. And if they do, the market will have an absolute tantrum and is likely to collapse, and then the house of cards falls. I see them almost out of levers. So they're trying to suppress the economy long enough to bring in the new central bank digital currency, where they have macro and micro control over the economy. It's individual monetary policy, but then they can control velocity, they can control interest rates, they can impose negative or positive interest rates on a personal basis. They have what they see is they have complete control over the economy. But the free market is always the best form, because things have to correct very quickly within the free market. These are people who think they know everything, trying to control the economy. So that's where, for me, it has the potential to completely collapse. When you start removing the free market out of it, that's when you get into dangerous territory, because decisions have massive impact, global impact. So that's where I say, now, as for businesses, I think it starts with how this keeps going. It's a ratchet system. So every time you take a step forward and say, yes, there's no going back to the old system, to the way it was. There is, in the North Advocacy Rights Network, there's lawyers behind it, but they've taken a look at the legislation in the North, and the lawyer has said anybody worth their legal salt would see that this is insufficient. So if you imagine a circle, 360 degrees, the legislation covers 350 degrees. There's a gap. So the legislation tells you that you have to have a COVID status one of five, Section 16 say one of five, if you've had the tests, if you're exempt, vaccine, etc. And businesses have to have a safe and effective system in place. It doesn't tell you how you show your status. It just you have to have evidence, but evidence can be self-declaration like it is in taxes or when you're in the witness box. That's within the lawful legal realm. It doesn't tell the businesses what the safe and effective system should be. So it's misstating the law to say they have to implement a door policy. What they're doing is bridging that gap via the media, pretty much, with a COVID pass. Now, I don't know what the legislation is down here, but I would suspect they have that gap for plausible deniability. So what they are doing is empowering businesses to work within the law, protect themselves from any issue of discrimination, because again, when this goes to court, the government would have plausible deniability or any issues with GDPR, and not have a discriminatory door policy. So I think that's quite clever. There is ways, there's very intelligent people working on this, to have a look and find out what the cracks are and pull them apart. So that is a solution, because once we move past the businesses with these passes, that's a green light for the passes altogether.
So let's talk about solutions. Mark, what do you propose people do?
Turn off their TV, turn off their radio, listen to people who've got this right for the last few years, few months, few years, and Eddie has a track record. Melissa's doing great work in recent months, recent years, and they have to realise there's real risk there, because it's like the only risk in the world is COVID, and we ignore all these other risks, and the media completely ignores these huge financial, economic and monetary risks. So they need to realise these risks are real, and then they need to start taking action, protect themselves financially, economically, monetarily. So, gold and silver, owning physical gold and silver, taking delivery of some gold and silver if they feel comfortable with it in their own house, own it in the safest vaults in the world. All these things are prerequisites, and it's part of a wider diversified portfolio, and Eddie can talk about that. They need to have a balanced portfolio, but given we're heading into this era of inflation, and inflation has been much higher for years, I believe. I think the official government inflation statistics are quite bogus, and we have to be aware of that as well. If you use the methodology from the 1980s, inflation will be much, much higher. And we also have shrinkflation now. The bag of spinach used to be 300 grams and it was like nearly €3. Now it's 100 grams and it's the same price. That's massive inflation. That's not baked into the cake, So people need to realise the purchasing power of their money is going down all the time. It's not the price of goods is going up per se, it's the value of the money is going down. I do think we just need to be more resilient, We don't want to be dependent on, I like the term Eddie used, and I've used the term the corporatocracy for a long period of time. We don't have capitalism, we have a very corrupt form of corporatocracy, and it's an authoritarian corporatocracy now, it's top down, and we see this with the vaccine passports as well. And they're destroying the small to medium enterprises, which are the backbone of the economy, for the sake of these giant corporates. So we should be boycotting the corporates as much as possible. So support Irish business and support business who are not enforcing these Nazi passes, and let's call them what they are. They are highly discriminatory. They are segregating the public. It's outrageous. It's a fundamental abuse of civil and human rights, which our ancestors would turn their graves if they saw how we're going along with this. So we all need to grow a pair. I hate to use a bit of language, but let's have a bit of plain speaking here. Everybody needs to grow a pair. Stop wearing masks. Stop wearing masks going into shops or going in anywhere. Do not wear a mask for a start. Do not vaccinate your children. Do not vaccinate yourself with these bogus vaccines or whatever you want to call them. The business owners need to stop doing it. They're actually building their own prisons and shutting down their own businesses. They need to stop enforcing this, because they're actually acting. They're following the orders, and we're just following the orders, they say. And you're like, come on, what did you not realise what you're doing to your own business? You're destroying your own business, So mass non-compliance is the solution. Gandhi did it very effectively against the British Empire. And if we started doing that, even 5 or 10% of the population did that in Ireland and around the world, this would be over in a few weeks.
I like the idea of Ireland being somewhere that if we could turn it here, it could help the rest of the world.
Yeah, we can and we will. Yeah.
So Eddie, what would be your...
Well, I think firstly we need to be very careful of they. We're inclined to say they as if there is a group of theys out there that are plotting and planning all of this. I don't believe that's the case. But what I do strenuously object to is the complete emancipation of sovereign power that has gone on our watch over the last couple of decades, and is now manifesting itself in this very powerful non-sovereign decision making about how the world is supposed to work, according to Davos man, as I call it, just to give it a name. In that pot you have the Bank for International Settlements, which Melissa's talked about. You have the IMF, you have the nexus of global central banks led by the Fed, and you have a small number of utterly obscenely wealthy people and families sitting behind the whole thing. When you look, for example, at the United States of America, which is the engine room of world growth, and you look at the main stock market, the S&P 500, that has over the last, well, since the trough in Q1 2009, that has returned to capital, the owners of capital, a return of over 8 times their money, 800%. And if you bought in at the bottom, right? And workers' wages have gone up less than 50%. So there's a massive inequality has occurred globally between the owners of capital and workers. And they're the numbers to what a lot of people feel. So I think we're at a war. I mean, I'm not understating it, between liberal individual freedom and our rights to individual freedom and what is being applied by supranational organisations beyond the control of our own government and beyond the control, you could argue as well, of the EU, which has allowed one of its member states to develop what is an authoritarian grip on their own population, where they're going to force vaccines into their arms at the cost of substantial fines. I mean, this is outrageous what's going on our watch, and that's the issue for me. On the question of does this then jump into a global financial collapse? The answer is no. I don't see the evidence of that. I keep coming back to that. I don't see that happening, certainly for the moment. If you go to the bell curve of possibilities, it's sitting out there as a real possibility, as a possibility that has to be looked at and discussed and grasped. But right now, what I'm seeing is persistent high inflation. And that might seem like, well, that's a nothing burger. It's a huge burger. So what we'll see in a position like that, to get down to brass tacks with people, is that what it means is that the money in the bank that you've got, which you've lost 5 or 6% of this year, you're going to lose more of it. Last year, you're going to lose more of it this year, and you can file away what central banks are telling you about it halving or going down to very small numbers and returning back to normal under science fiction. Right? That, in my opinion, I don't see that happening. So what does that mean? It means that when you put money into unpost certs and bonds, you're going to lose value against inflation. It means that if you're not a member of a trade union, you should be. And you should be formulating trade unions, because you will need representation in order to stand up against capital to try and get higher wages to advance against inflation. So we will see that happening. But unions are weak in Ireland in the private sector, and that you will see all this happening as people try and fight for wage increases to counteract inflation. It was very interesting that in the recent study by the Sunday Independent, which was published last weekend, that the cost of living was a higher concern for the Irish public than COVID. Right? That's a very significant shift.
That is
right?
a huge shift.
Yeah, because they're beginning to see it in day-to-day spending. And another year or two of that, and we're into a completely different ball game. So it also means, and Melissa mentioned this, and I don't want to steal your thunder, but if you've got a long-term mortgage, 20 or 30 years left in it, and it's on a variable rate of whatever the variable rate is, 3 or 4 or 5%, whatever it is, if you can get a long-term fixed rate at less than the inflation rate, it's something you should be seriously looking at, taking advice from an authorised and accredited advisor in that sector. You should definitely have up to 10 to 15% of your liquid assets in precious metals, in my opinion, gold. Some people like to take punts on cryptocurrency. That's for an entirely different discussion.
Well, we don't have a crypto specifically expert on this table.
But how all that fits into all of that, right? Especially as the central banks are going to bring out digital currencies, and that they're going to squeeze that, in my opinion. So you know other things that hold value during periods of high inflation is land, works of art, intellectual property, plant and machinery, all of the things that capital can sink into. And then the way people will invest in stock markets will shift from investing on the growth of future earnings to actual asset values. What is the net asset value of this business, and can it push its prices against inflation? So those things are going to be looked at. And finally, I'd make this comment, which is just sitting out there. On the positive side of all of this, the Bank of America have calculated that the total amount of money needed to get us to zero carbon is 150 trillion over the next 30 years. 150 trillion. That's the equivalent of extra spending in the global economy, equivalent to the GDP of somewhere between Germany and Japan every single year for 30 years. And that money is going to come from government borrowings, it's going to come from money printing, it's going to come from private capital, and it's going to come from taxes. And that's going to create a huge growth opportunity, vast growth opportunity in an awful lot of asset classes: infrastructure, energy storage, transportation. All of those things are going to create economic growth. And I said at the very start of this discussion that the value of a currency is a function of the confidence that the growth will continue, and that future economic prosperity will pay for the debts that are being built up today. That's the concept. If that concept breaks down, we're in a completely different ball game. So I think that's very important. And finally, it's very early stage stuff, but I'm watching it closely. There are significant advances being made in very recent times in fusion energy. So it's now gone from holding the energy created by fusion power from microseconds to the last one, I think, was around 17 minutes. They managed to hold it for in one of the facilities in China. The Americans are at it as well. So we are now in the equivalent of the Manhattan Project in fusion energy. They're beginning to create temperatures that are vastly in excess of the temperatures at the surface of the sun. And if we can get to fusion energy over the next 10 or 15 years, the whole ball game is going to change again. So I keep saying the same thing. We have to be very careful of binary approaches to these issues. There's a lot of moving parts and there's a lot of potential future outcomes out there. But one thing I know with absolute certainty is that if we can wake up and see ourselves as owners of human rights that cannot be alienated from us by sovereign governments who are being pressed upon by these supranational organisations, we can do something about this. But so long as we continue to allow ourselves to be treated like battery hens, we will be continued, they will continue, the system will continue to treat us as that. There's far more of us than there is of them. And the way to that is to get people to begin to reignite their critical thinking, which has gone to sleep during the last couple of years for a lot of people, with their IV drip plugged into RTE and just listening and looking at the dashboard and then wondering why all of this information they're now beginning to pick up seems like tinfoil hat stuff, when of course it's not. It's reality.
Thanks, Eddie. Melissa?
Just to touch on, I think it was Janet Yellen said at COP26 that it would be 150 trillion to solve climate change, global warming, whatever. That was the same figure, 150 trillion, that was bounced about by the WEF in 2010 after the 2008 collapse to solve the banking crisis. Oh. Could just be a coincidence.
It's a good round number.
Yes, in terms of what can you do, inflation is here to stay. I did mention with interest rates, there is the potential for inflation to get out of control, in which case they will have to raise interest rates. So absolutely have a look at that and really look at the details in your mortgage to make sure it is a fixed rate mortgage. They're now starting to talk about price controls. Terrible idea. You're in business to make a profit. So if there's a price cap on it and you can't make a profit, well, you will cease production. That's going to cause further distortion in the supply chain. And then the quality of the product initially will decrease. So watch out for that and watch out for energy prices. I would agree absolutely with precious metals. I would agree with crypto. I'd like to get somebody on to talk about the other side of crypto. For me, absolutely speculative asset. Crypto is the sprint. Gold is the marathon. So I would look at, is there potential for a stock market crash? Yes. We know that Jeff Bezos has pulled out 10 billion, so has Elon Musk. Not all of that was for taxes and options. Only half of it was for taxes and options. You have Zuckerberg pulling out. You have It's the Walton family from Walmart. There's a lot of them pulling out of the stock market. What do they know that we don't? So in that potential, have a look at your pension, if it's linked to the stock market. Have a look at your finances, because we tend to delegate our thinking to mainstream media. We delegate our parenting to the education system, and we have delegated our finances to the pensions. So take back responsibility on yourself. What I would say is the reason that I would be more bullish on gold is in the collapse in 2000 and following 2008, there was a 65% decrease in the market and 25% decrease in gold, because when it collapses, everything will go along with it. So the question is, what rebounds? It took the stock market 7 years to gain back. It took gold 7 months. So that's why I would be in favour of it. I don't sell it. It's just what if I feel, what I'm telling people to do is what I do. So if they feel, I feel.
Thanks, Melissa. So Jim, solutions. What can we do?
I wakened up to what the banking industry was 10 years ago. And I set up the Public Banking Forum, and I knew nothing whatever about banking at that stage. I've spent the last 10 years along with a few very dedicated people, and we have learned a lot about how the system works. The fact of the matter is that we put a proposal to government whereby effectively a comprehensive network of community banks could have been delivered across the nation for less than €40 per man, woman and child over a period of 5 years. So, 70 pence a month would effectively have done it. Now, the minister told us we couldn't afford that. We were forced back onto the drawing table to design a model that could be delivered to the public without the support of official Ireland, who certainly do not want this to happen. And we have developed a model, and we have the best experts in the world behind it. And we do expect to launch in the very near future. I am sorry that it hasn't been done, but even COVID has interfered with the simple things of meeting and getting work done. But we have a very simple plan, and a 5% buy-in from the public to develop member-owned community banks will deliver 2 banks that will cover from one end of the country to the other, and will provide, above all else in the short term, a safe space for people who have actually got savings. Now, the point in that is fundamental, that if you have deposits, or what you believe are deposits, in an insolvent bank, then the money is not yours. It is an unsecured loan, and the bank can never pay it back. And the derivatives market have a primary call on your so-called deposit. And I am only regretful that we haven't been able to pull this together much sooner. A 10% bank buy-in by the public will deliver 4 banks. 20 will put 8 banks on the ground, and 30% will put 12 banks approximately. And that doesn't have to be done overnight. It can develop. We have a lot of work to be done, and there's a certain admin cost in the initial phase that we are at the moment working to cover. And once that is sorted, then this is up and running.
Well, that sounds incredibly promising, and really I think all of us look forward to hearing more about that, and something that we can really start working towards as a community and as a country and as individuals as well. I want to thank you all very much for being here. It's been an incredibly interesting roundtable. I think we could have probably spoken for a week and we still wouldn't really cover everything that you'd like everyone to know. But thank you for your courage. Thank you for your ethics and your morals for speaking up and speaking out. And I'd like to wish you all the best of luck.